So to benchmark infrastructure debt performance, today we're using as a bank, we are using the margin that you can find in the market. So the spreads, look at how it can be in different regions or sectors. We use as well sometimes for PPP transaction, for instance, the sovereign bonds, which is relevant, but we don't have yet the right index for that.
We currently use the U.S. Consumer Price Index plus 400 basis points. Seems to be kind of common to be used in the United States, but we're certainly looking to explore any different ways to improve the benchmark. We know it's an imperfect benchmark, but it's something to start with.
What we currently use for benchmarking infrastructure performance is a listed public infrastructure benchmark. However, we invest in private public infrastructure, so it's a little bit of a problem. We think that the characteristics of private infrastructure is not really represented by this public benchmark that we use.
The challenge is finding the right sort of benchmark. So I guess we're looking for EDHECinfra to help us meet that challenge.
I think risk is not well enough understood in the infrastructure space today. Many people work with target-oriented benchmark. They think about return, they don't think enough about risk.
I think that the risk is crucial, and if you benchmark against absolute returns, you have to have a return figure to comparing it with, and it doesn't describe the asset class.
The industry needs better valuation models. We've existed with the current system for years and years. We know that there's some imperfections, even from, it's what we inherited from private equity and real estate. And if someone can create better benchmarks along the way, that just certainly helps us in terms of evaluating our progress and evaluating our portfolios in a more systematic way than the way possibly we do it now.
Industry is definitely in the need of a better valuation model, and that can only be based on better quality indices that capture not only return characteristics but also risk profile and other financial metrics of infrastructure.
Some listed infrastructure funds are very targeted in their investment universe and may be a good proxy for private infrastructure fund having a very similar target. The generally widely available infrastructure funds have a very strong focus on large corporates, have a very strong investment proportion in US dollars, and therefore may not be a particularly good proxy for private debt investment in a very different universe. I think there can be a proxy of using public infrastructure, and we have used it in some of our benchmark, but that's by building very carefully selected public proxies which better reflect the private investment universe. There is no wide global market benchmark available, and therefore I think the creation of the benchmarks by EDHECinfra is bringing forward a lot of market transparency and clarity.
Accurate measurement of the risk that we're taking, and clearly as an illiquid asset that's harder to measure, and therefore the industry needs to develop some standards for that.
Having a risk-adjusted benchmark would really allow to benchmark performance of asset managers or banks that are distributing those assets, and that will bring much larger liquidity to the asset class.
I think we have ideas as to what risk is. In terms of quantitative measures of that, we don't. I think we sometimes move risk and diversification as kind of one giant thing, and the more diversified that we are, the less risky we are, which I don't think is necessarily true. So anything that works to allow us to develop measures of risk and more sophistication in terms of modeling, I think is definitely the direction that we want to go.
When you do the investments privately, you do it more maybe like on project base. So, and if you want to look at it as an investment class, you have to get more data.